Alright guys, so here in this video, I'm going to give it to you straight and right off the bat. This is a make it or break it week for the stock market. We have seen a substantial rally in 2023, and a large part of this rally is that earnings are hopefully going to come in better than expectations, or at least in line with expectations. And what we have seen so far is good earnings with weak guidance, and specifically that came out of Microsoft. Well, in this week, you're going to get the rest of the crew. You're going to get over 45% of the S&P, over 50% of the NASDAQ weighting that will be reporting earnings this week. Specifically, Apple, Google, Amazon, they all report earnings on the same day. And what they have to say will be the single biggest driving factor of this market from here on out. And if you think it's the Fed, let me quickly change your mind. Now, throughout all of 2022, the markets were selling off in anticipation that the Fed's going to keep raising rates, in anticipation that it will cause a recession or an earnings decline at the very least. Well, now we already know the Fed's going to raise rates to about 5%. And keep them there for a while. If inflation continues to come down, then the Fed is no longer a concern to this market, or a major concern, I should say, because it's already well-known information. What is unknown is how the Fed's policy decisions in 2022 will affect company earnings in 2023. And the initial reports that we are getting from companies like Hasbro for the Q4 holiday shopping season have not been pleasant. And we're going to go over that in this video, but more specifically, what could happen if this is a break it kind of week, guys. So this is not a video to cause fear, uncertainty, and doubt. Quite the opposite, because I think there is a lot of bullish things you could say at the same time. So we're going to get into earnings. We're going to talk about the economic data. We're going to talk about Fed Jerome Powell, and we are going to give you guys a Tesla update, because on Friday, we got some really good news from Lucid Motors that made the whole sector go through a bit of a short squeeze. So does this continue in this next upcoming week? Guys, we got a lot to talk about. So let's get into it. Hit that like button for me and subscribe to the channel. But before you do that, watch this video, and if you learn something, then by all means, subscribe to the channel and hit that like button. And thank you guys for 1,600 beautiful subscribers. Let's see if we can get that up like 40 or 50 on this video. That would make my day. Now, let's get into this information, guys. So, the make it or break it. And I know I'm going to trigger a lot of people by saying that. And really the whole premise of that is earnings are the most important thing for 2023. If Q4, the biggest holiday shopping season, was not good, well, we're obviously going to know that by the end of this week, but it's going to make that full year 2023 price discovery a lot more up in the air. Where do earnings look like for the entirety of 2023? The estimates are going to have to come down. And when estimates come down, stock prices follow suit. And like I said, some data we're getting from Hasbro is not good. And let's take a look at some of those numbers, guys, because wow, are they tough. So Hasbro warns of weak holiday quarter results, cuts 15% of its workforce. Now I want to talk about the actual numbers here for a minute. Hasbro said it expects fourth quarter revenue, which includes the holiday season, to reach $1.68 billion, down 17% compared to the year earlier period. Estimates had called for Hasbro to reach $1.92 billion during the quarter. This is an over 25% miss for Q4 earnings. Now, I know these companies we're talking about, Amazon and Apple, are a lot different than Hasbro, but they're a lot similar in the same regards as well, right? They're both a very relevant company when you come down to Q4 earnings, right? When you come down to just the holiday season, people are buying toys, people are buying iPhones, people are buying things off of Amazon. If Hasbro's numbers don't look good, well, it's not going to look good for these other companies. And Apple and Amazon specifically are the most important companies to the stock market, right behind Microsoft. You could really put this: Apple number 1, Microsoft number 2, Amazon number 3, and Google number 4, and then you could go down that list. But I'm talking by market weighting. So Apple is 7% of the S&P, over 10% weighting of the NASDAQ. If Apple falls 10% on earnings, that means the NASDAQ will go down 1% based off of that drop alone, not to mention other stocks following suit if they have bad earnings. So that is specifically why this week is a make it or break it week. If earnings are bad, look out below. It could get ugly very, very quick. So, on a bullish note, because I don't want to give you guys just the negatives here, right? We're a very neutral channel. We call things how it is. We call out BS when there is BS to call out. And the most bullish thing I could say about this market period that we're in right now is, one, you've seen a lot of pain in 2022, and a lot of stocks are still dramatically beaten down. The earnings estimates have come down quite a bit from summer of 2022. And we're talking for full year 2023. They're still very high though, so it's not necessarily a good position that we're in. But the number one most bullish thing this market has going for it is the lack of positioning. There is not a lot of positioning in the stock market that is directionally bullish. You are at the lowest levels of hedge fund long exposure that you have seen in over 20 years. So long story short, it's not going to take a lot of good news on these companies' earnings to get the markets to go up or at least stay at current levels. You don't necessarily have to see the markets go up or down. You could trade sideways for weeks or months at a time. And I think you have went up aggressively that if earnings do come in line with expectations, you're not going to rally that much, but I think you will hold up a lot better over the next couple of months until you get to Q1 2023 earnings, which will be April, May, June-ish. That's when you're going to get Q2 earnings. So long story short, these earnings this week will be massively important. Now, when are the earnings? So Monday pre-market, you have SoFi. Tuesday in pre-market, you have UPS. And I think UPS could really set the tone for the rest of the week. And I think that because UPS is highly correlated with Amazon. So if UPS has good earnings, Amazon's likely to have good earnings. Now, Amazon's a much more important company to the markets than UPS, but they're almost 1-1. So if they do good, that's going to foreshadow some good earnings from Amazon. And the markets would really love that. If UPS has bad earnings, well, it's not going to look good heading into Amazon earnings. Tuesday and after hours, you have AMD and Snapchat. Wednesday and after hours, you have Facebook. Now, Thursday, that's where things could get insane. You have Amazon, Apple, and Google reporting earnings the same day. Typically, that does not happen. Typically, all three of these companies do not report earnings on the same day at the same time. So coming on Friday, you're going to know what direction this market's going to go for the next couple of weeks, next couple of months at the bare minimum, because you're going to get these company earnings. Now, Apple is the most important company, and this is the one to really watch out for, in my personal opinion. We can make a whole video on this, but long story short, I'm not that bullish on Apple earnings because their expectations are still so high relative to something like Google or Amazon that is back to pre-COVID levels, or at least touched those pre-COVID levels, whereas Apple is still 89% higher than its pre-COVID highs. There's still a lot of meat on the bone for Apple. There's still very high expectations for Apple earnings, and Apple needs to deliver on earnings and these earnings expectations, or things are going to get a little bit choppy in the markets, for a lack of a better word. Now, the story's not just earnings, because you also have a lot of economic data for this week as well. So On Monday, you don't have anything. On Tuesday, you really don't have anything as well that is huge to the markets or important. You do have the S&P Case-Shiller Home Price Index that can move the markets a little bit, but it's not usually one of those things that drives the markets up or down for days. It's not like getting a hot CPI report or a low CPI report that has a multi-day effect on the markets. That's not it. So you really don't have much for Monday and Tuesday. On Wednesday, you have the ISM Manufacturing PMI for January at 10 o'clock in the morning, and also the JOLTS job openings at 10 o'clock in the morning as well. You're expecting 9.5 million job openings, so you're expecting job openings to go down by about 1 million from the 10.5 million number that you seen in November. Now, a thing that I really want to point out to you guys and make 100% clear, at least for the couple hundred or so of you guys that are going to watch this video, or hopefully thousands of you guys, is in 2022, we've seen this effect where the markets were worried about good economic data. The markets were worried about people spending money, the unemployment rate going down, because it would lead to the Fed raising rates more. Well, and subsequently, if you've seen good economic data, like very positive things for the economy, it was seen as a negative for the stock market. Well, that is no longer the case for 2023. And it was the case for 2022 because the Fed raising rates leads us closer to a recession. Well, now that the Fed has firmly outlined what their policy is going to be going ahead, they're going to get rates to 5%. They're going to hold rates. As long as inflation continues to come down, good economic data will be good for the markets, because ultimately, why did the market sell off in 2022? The Fed was raising rates and going to put us into a recession. If that recession does not end up coming, or at least the economic data does not show a recession is coming, that's going to be positive. And if economic data does not show a recession is coming, it's going to mean the economic data is coming out good, right? If economic data deteriorates, the markets are not going to like that. We already know what the Fed's plans are. We already know what's going to happen. That is no longer an uncertainty for 2023. It is uncertain what the data is going to look like for 2023, though, or if we will go into recession or not, guys. So long story short, good news is good news for the stock market. Bad news is bad news for the stock market. Unlike what you've seen in 2022, where good news was bad news and bad news was good news, that is absolutely no longer the case for 2023. That is basically it for Wednesday. Besides the Fed interest rate decision, and that comes at 2 p.m., we're firmly expecting a 25 basis point rate hike, and that's not the important part. The important part is, what does the Fed say about pausing? What does the Fed say about the economy right now? If the Fed were to pause or signal that they're going to pause quickly, that might actually be a negative thing, because why are they pausing when the federal funds rate is going to be 5.5 to 5.75% and not at their 5% target? Right? So a pause here might actually not be a good thing if they talk about a pause. If they say they got to keep raising rates, that's going to be a relatively known thing. That's going to be a positive thing. And really, when it comes to the Fed, if you get any new information, that could be, pretty bad for the markets. You want the Fed on Wednesday to give you the same thing that they have been saying. That's the best outcome for Wednesday. You don't want to see a pause. That's not necessarily a good thing. And actually, when the Fed cuts rates, that's when historically the markets have actually crashed. We might have not seen anything yet. If the Fed comes out and really cuts rates by the end of the year, that would mean the economic data is looking very bad by then. So hopefully that gives you guys a little bit of a rundown. Now on Thursday, you're not going to get much either. You're going to get initial jobless claims. You're expecting 187,000. Last week was 186,000. So you're not really expecting a huge move in the initial jobless claims on Thursday. On Friday, that's going to be bigger as far as economic data, but the earnings are probably going to outweigh this, because you have those three company earnings, Apple, Amazon, and Google, on Thursday in after hours. So on Friday, that's when you're going to see the real full day move following those earnings. So I don't think this economic data will be as important nearly as company earnings, but you do get a lot of economic data, important economic data on Friday as well. 8:30 in the morning, the unemployment rate for January, you are expecting 3.6%. The last reading we got last month for December was 3.5%. So you are expecting unemployment to tick up a little bit. And the non-farm payrolls, you are expecting to add 190,000 additional jobs for the month of January. The last month in December, you added 223,000 jobs. So this is a good example of bad news is bad news, good news is good news. If you see the non-farm payrolls come in negative or like 50,000 jobs, that's going to be a negative thing for the stock market. Preferably, you want to see the non-farm payrolls come in right in line with expectations. Anything lower than that is going to be bad news. And potentially, if they go higher, it's going to be good news. Because, I mean, who doesn't like more jobs being added to the economy if inflation is going down? Now, if inflation goes up in the future over the next couple of months, obviously, you might go back to this bad news is good news and good news is bad news thing that we've seen in 2022. But as of right now, it looks clear that inflation will continue to come down. So the narrative stays the same. Good news is good news. Bad news is bad news. Now, you are going to get ISM non-manufacturing PMI at 10 o'clock in the morning as well. I think this is really a sideshow. Really, this economic data is going to be a sideshow compared to earnings. If earnings are really good or really bad, this data could just add to a bullish market or add to a potentially bearish market. Like, for an example, if Apple, Amazon, Google, if say they all fall 20% on earnings, earnings are really bad. If this economic data comes in really good, I don't think it's going to make you have a good day. That's the long story short, or vice versa. It's not going to save the day, what this economic data looks like compared to earnings. Hopefully that makes some sense to you guys. Now, let's get into the other things that you need to know. And a big key to what I'm saying is where the markets are as far as the technicals, guys, because you have rallied quite a bit. So the make it part of this video, the make it or break it part, but the actual make it part would be the markets continuing to go higher and to really solidify this uptrend, because as of right now, you have started an uptrend. You are above this downtrending line of resistance that you were in this whole pattern. I mean, it's pretty clear to see right here. Ever since you peaked out in the markets in January of 2022, it's been over a year that you were in a downtrend. You have broken above that, so now you are in a technical uptrend. And if I just draw some just simple lines here, guys, if you do get earnings beat across the board, just a simple trend, like very, very simple trend line here, you could set your sights on that 425 to 430 level pretty dang quickly. And that would get you well above this downtrending line, and that would be a really good thing for the markets. If earnings are bad, well, you could still break it from here. Just because you're above this line for a couple days, 1, 2, 3 days where you rallied a little over 1%, it's only going to take, get this, about a 2.5% drop to get you back under this line. So you're not high enough above this line to really be free and clear. As of right now, it looks good, but you can't say you are out of the clear until we are past earnings. After earnings, that would be a much better trade to play that move, because if earnings are good, the following next couple of months are probably going to be very good, or at least flat. That's what I would expect. I wouldn't expect to see a big drop over the next couple of months until at least the next earnings season, if this earnings season is good. Now, if World War III starts or something crazy that we can't forecast happens, well, that's a different story. But based off of what the markets care about, it's all about the earnings. And whatever earnings gives us, that's what we're going to have to deal with over the next couple of months. Now, on that note, Tesla stock has rallied quite a bit with record high continuing volume over the last couple of months. And if the markets continue to be positive and look at earnings in a bullish way, if earnings are good, Tesla stock could actually go through a short squeeze, in my personal opinion, and get even back to this mid level here, this mid range where we really traded over the past couple of years. in between about $200 and about $250. That would be the range that I would target if you do really get squeezy and you see this lack of positioning from hedge funds and money managers push money back into stocks like Tesla that they sold for tax loss harvest purposes or fears of a recession. If that does not materialize, you will probably see Tesla head back to about $300 per share, the level that the stock was at just in September. So I do think there is a huge potential here for not only a downside move, but an upside move as well, specifically in certain companies, right? The companies like a Facebook, like a Tesla, that really have gotten sold off over the last couple of months. Facebook, maybe not the best example, but Tesla is a clean example of a stock that has got sold off over the last couple of months, and Tesla just had great earnings. So the risk of, bad earnings coming from Tesla is gone. I mean, they had good earnings. They had record earnings, top and bottom line were both beats. And Tesla's seeing the best demand that it's ever seen for a start of any year in their business history. They are selling 2 vehicles compared to every one that they can produce. That is a very good problem to have. And it could boast well for Tesla stock if the market environment does warrant more positioning in technology. Hopefully all of this makes sense to you guys. So that's pretty much going to be it in this video. Just a quick look too, if you guys do not know what happened on Friday that really sent all EV stocks higher besides just Tesla earnings on Thursday, or Wednesday, that were very bullish. It's Lucid and the Saudi fund trying to buy the rest of Lucid, or at least a strong rumor that they are going to acquire the rest of Lucid, in which they already own 65% of Lucid. We'll see what happens with this rumor. If it continues to lead to an upside move, that's going to continue to be bullish for this sector. Now, I don't think specifically for Tesla, if this rumor is rebutted and it's not true to begin with, if Lucid confirms that, just to play along with me, I don't think that means Tesla has to go down. Like, I don't think there has to be that correlation, because after all, Tesla was already up like 10% before that news ever came out about the Saudi fund and Lucid, guys. So that is really what happened on Friday. That's what you have in store for this week. Leave your comments, questions, or concerns down below in the comment section. I would love to hear what you guys think specifically about earnings. Why are you bullish? Why are you bearish? Which ones are you bullish on? Which ones are you bearish on? I would love to hear that information, guys. And I do respond to every single comment. So thank you guys for doing that. Thank you for 1,600 beautiful subscribers. Hit that like button and subscribe to the channel if you like my perspectives, you like these deep dives into the markets, but more specifically how markets are thinking. We try to break down the psychology of markets in a real-time, day-to-day basis so you can understand this information and make money off of it. A lot of people, believe it or not, might still be in the mindset that bad economic news is good for the stock market, and it's vice versa. But you might not know that until it's too late. But watching this video, you know that. At the very least, you know bad economic data is bad for the stock market now. Good economic data is good for the stock market. So enough rambling. I can make like a 2-hour long video. I'm not going to do that to you guys. You guys enjoy the rest of your day, and I will see you in the next one.